The biggest and most important event this summer are the Nvidia earnings coming up. They could send shockwaves to the entire market. We're talking about potential double-digit swings in major stocks. And what does that mean for you? Well, opportunity, right, left, and center. First of all, write down August 28th of 2024, because this is the date that will change everything in a good way or not so good way. We're going to walk through here what institutions Wall Street's expecting. We're going to walk through how much the stock is expected to move by. We're going to walk through the impact, what they're going to announce, and everything else to make you the best informed investor out there, so you'll be smarter going into the coming week. First, let's peel back the layers of what Wall Street is expecting from Nvidia's upcoming earnings. First up, revenue. Analysts are projecting a staggering 110% year-over-year growth. Yes, 110%. To put that in perspective, it's kind of like just mind-boggling that a company can grow that fast when it is already this big. I mean, we're talking about 26 billion revenue in the last quarter. They're going to double that? Insane. Well, they're going to double it from last year's perspective. But before we dive into how much it's going to move the stock by to make you better informed, if you want to learn how we make money with this, like real trades with this, then I'll share with you our 3-step strategy and how we trade just a couple of hours a week. We're already up over 80% on the year. And I know that sounds too good to be true. But if you're curious enough to challenge yourself and your belief system, then come and join me at felixprehn.org/bootcamp and learn exactly how we do what we do. But let's go back to Nvidia here. They did achieve 100% growth in the previous year. So we're talking about a company here that's not just growing, it's like literally doubling in size year after year. And the naysayers are going to say, well, you can't double forever. And that's, of course, true. But anyway, let's look at profits for a moment here. So we're talking about earnings per share, the most important metric out there. And analysts are forecasting a 157% growth, which is absolutely earth-shattering. So they're not just going to beat revenue growth, they're going to massively outperform on profit growth as well, which is absolutely fantastic, isn't it? So what could go wrong? Well, let's first of all understand what this actually means. It suggests that Nvidia isn't just selling more, it's becoming more efficient, squeezing more profit out of every dollar and revenue. It's kind of like that sort of star athlete, not just running faster, but doing it while they're carrying, I don't know, their luggage. So what's the market expecting? Well, the whispers, the unofficial estimates circulating amongst traders are that Nvidia will surpass these sky-high expectations. So the market's kind of holding its breath to see how much can they beat it by. But let me show you something, which is kind of the really important thing here. This little box here shows you for each of the last quarters, the earnings per share that was expected in black, and then in green by how much they beat by. And for revenue, the same. This is the revenue reported, and then how much did they beat expectations by. And what do you notice? Well, in Q2 2024, they beat expectations by 2.4 billion. The next quarter, they beat by 2 billion. The next quarter by 1.5 billion. The next quarter by 1.48 billion. So what you're starting to see is that there is a little bit of a smaller beat compared to expectations, because expectations get higher and higher and higher, and it becomes a little bit harder. So the risk is that we'll beat only by 2 or 3 cents on earnings per share and maybe only by $1 billion on revenue. And then the market's going to be like, not as good as we thought, even though they beat expectations. The market's fickle. So this is what we got to watch out for as we look at how much this is going to move the stock by. If we look at recent stock performance here, we've been on an absolute run, right? But we hit that all-time high in June, 18th of June at 140. We came back down. We formed another high that was a little bit lower than that previous high. And then we really tanked. And a little bit of that was, the very bottom of that was the sort of Japan hiccup. But otherwise, it was just Nvidia tanking. And now we're recovering very nicely here, sort of to 130 or so. But we've dipped again a little bit. So do we have another high here, which is now, let me get a pen. So we've got one high, we've got 2 highs, and we've got 3 highs. And you'll notice that each new high is lower than the previous one. Not exactly brilliant, although the tear that we're on right now looks quite impressive. And one day's mini dip doesn't really make necessarily a peak, right? We could go higher from here. And that's, of course, the important thing. We want this box to move higher up. So the stock has shown quite a lot of resilience considering how much it's gone up. Now, what you might really want to know is how much is the stock going to move by next week? And I can tell you that. And how do I tell you that? Well, do you see this blue box here on the right? And this is in tradevision.io, by the way, which is a platform that we built to make traders smarter and give you the same edge that Wall Street has. And let me continue this blue box onto the stock chart here with my horizontal blue lines. And what that's saying to you is that the market is expecting Nvidia to either go up to 145 after earnings or drop to 108 after earnings, which is essentially, what is that? $20, give or take. A little bit more upside expectation, a little bit less downside expectation. And that's quite a big range. But if you look at where the stock's been lately, slightly above the recent high and not quite as low as the recent low, it's actually kind of a bullish endorsement, isn't it? Because the market isn't saying, look, it's going to drop all the way down here, potentially. The market's saying it's going to go there. Now, you might be thinking that's hocus pocus. How does anybody know that? It's market positioning, it's probabilities. All the data is out there. It's just most retail investors don't realize this data even exists, right? We do. We make it accessible to you if you want to play with that. There's a trial for that for a month, so check that out. Now, what's particularly interesting is just market sentiment here, right? We've seen a notable increase in institutional buying during the recent market sell-off. How do we know that? Because we get all those releases from all the hedge funds and all the funds that tell us what they've just bought. So we've got a lot more institutional money in on this, which is pretty good. And then I suggested, I think the trend is pretty decent. You know, we're in a relatively bullish scenario here. Our little trend indicator in the background here turned green on the 14th of August. That basically said, buy me, buy me, buy me, please. Of course, it's not financial advice, but it's an indicator that's pretty powerful. And understanding these indicators and knowing that they're promising, it's still crucial to remember that past performance doesn't necessarily guarantee future results, right? The real test will be the actual Nvidia earnings and how they stack up against these expectations. Are we beating by the same margin as last quarter? Are we beating expectations by 5 cents or more? Are we beating revenue by 1.4 billion or more? Because if we're not, we're starting to disappoint, even though we're still beating, which is, I know, a bit peculiar, but that's the way the market looks at this. So the real test is how much do we meet expectations by? But let's look at some of the red flags that people would throw up if expectations or if earnings come in maybe just a little soft, right? I'm not saying they will, but I actually think they're going to do quite well, but I'll explain that to you a little bit more in a moment. But let's just say what people will throw at this. And you're going to hear about this in the news, so you understand what's going on there. They're going to talk about competition. AMD, right? They've been making some pretty significant strides in the GPU market. Their new RDNA 3 architecture is apparently impressive. So they're not just nipping at NVIDIA's heels. They're kind of starting to, well, you can see them right behind NVIDIA somewhat. And then Intel, okay, yeah, they're a little bit lagging behind, recent problems and all that, but their entry into the discrete GPU space with that Alchemist thing they got going on there hasn't really set the world on fire, but there are intentions there and there's lots of money there. And then we have non-traditional rivals. Cloud giants like Google and Amazon are developing their own AI chips. And these are also NVIDIA's largest customers. So this could potentially eat into NVIDIA's data center dominance at some point down the road. And we're going to want to hear from management about how are you guys going to do in 2025 and 2026? Because the market cares. And then we need to look at supply chains. So the chip shortage has eased somewhat. NVIDIA is, however, still reliant very much on Taiwan for manufacturing. That's a potential geopolitical weak spot for them there. And then you got all that regulatory nonsense, right? That's another stumbling block. There's some scrutiny over, well, they tried to acquire ARM. That didn't work out. You got export restrictions. And that could impact NVIDIA quite significantly. Though I don't think that much because their real customers are Meta, Microsoft, Google, Amazon, you know, those guys. Tesla. Those guys make up the vast majority of their revenue. So the only real danger to me is AMD coming out with a chip that's nearly as good but cheaper. because they're doing it at a lower margin. And B, these 5 tech giants saying, we've designed our own chip. And you know what? We can make it a lot cheaper. Maybe we'll even sell it to other people. That's the real risk. Now, I don't think that's going to happen this year. Probably isn't going to happen next year, but it could be a thing somewhere down the road, at which point Nvidia will not collapse, but their margins will get smaller. And the market really, really does not like it when margins get smaller. And then we have the delays around the Blackwell chip that's been officially announced. And delays are never good. That was part of manufacturing, but the market, again, doesn't like it. Because when you're priced like Nvidia is, you're kind of priced for perfection, you see. So everything you do has to be pretty much perfect. And then there is the whole market saturation concern. And that's something we'll hopefully get addressed on the earnings call. So the whole GPU market, at what point do we reach saturation? At what point do we have enough data centers? That's kind of the real question here. And depending on how much more demand there is, we're going to get into pricing pressures. It's a little bit like the fat loss drugs. Everyone's now making a fat loss drug, and therefore there's going to be pricing pressure. When everybody starts to make their own chips, there'll be pricing pressure. At the moment, they can charge whatever the heck they want, basically. But that might be more difficult unless Nvidia stays so far ahead of the competition that people are willing to pay more for the chips because they cost less in the operating scenario. And then you've got to look at tech disruption, right? Quantum computing, it's in its infancy, I get that, but it could potentially challenge GPUs. We might not need GPUs anymore. Of course, Nvidia is investing in that area, but you never know who the winner will be, right? It's a bit of an open field right now. Now, you're probably thinking, oh my God, Felix, you've turned bearish on Nvidia. No, I haven't. I'm saying I think Nvidia can live up to these lofty expectations. I think they will beat these lofty expectations, but the question is by how much? And how bullish of a guide are they going to give us for the next quarter? Because remember, the market's always forward-looking, right? So the real trillion-dollar question is, what's the guidance going to be for the following quarter? Not necessarily what has just happened. So they could have massively outperformed, but if they're a bit more cautious on the next quarter, again, we're potentially in trouble. But I also believe that AI dominance is here to stay, and the data center market is going to continue to boom for some period of time, and Nvidia is going to benefit from that absolutely enormously, and their data center revenue has been growing at a staggering rate. And I don't think that's going to slow down anytime soon. And there is nobody else better positioned for the increasing demand in cloud computing. Right? GPUs are the favorite among cloud providers. Nvidia's GPUs are the only ones who seem particularly programmed to handle those AI computations. And then you've got opportunities like autonomous driving, autonomous vehicles, right? Nvidia has partnerships with major players in the automotive industries. Pretty much everybody is using them, whether it's Mercedes or Audi or Volvo. They're putting them in the cars, or Tesla, who's obviously basing the whole supercomputer on it, or the vast majority of it at least. So Nvidia is likely to continue to be a key player in future industries, as well as the current ones, cloud computing. And then you've got to take a view on, are we going to get smart cities? Are we going to get complete industrial automation? Are we going to get robots everywhere? If you believe that's the case, then Nvidia is, again, better positioned than anybody to benefit from those trends because they've got the best technology. Then look at something like VR, right? You've seen those silly VR goggles. At the moment, it's only gamers that use those. Well, there is some truth that a lot of technology comes out of the military, porn, and gaming, right? And that's where you're seeing VR being used right now. But give it a few years, I think you will never, ever meet an engineer or somebody doing something technical without wearing one of those VR goggles, because be silly. They're going to get access to everything. They have all the data. They can get their handbooks. They have everything there with them right now. And that'll help them tremendously to just do their job better and more efficiently and cheaper. And eventually it'll be robots doing the same thing. So again, Nvidia powering those VR devices is going to be very, very positive. And then we have, of course, crypto. And people have almost forgotten about that, right? Crypto mining was the big thing a little while ago. And yes, the crypto market is volatile, but again, still big potential. They have a specific product for crypto mining, allowing them to capitalize on this market without impacting the availability of other GPUs for everything else. And then we, of course, want to look beyond hardware, because hardware is a one-time sell. Right, so you sell people a phone once, very nice. Now, if you are Apple, and this is a Samsung device, as is this, and you sell this device, you collect whatever, $1,000. It's a one-time sale. And yeah, maybe I'll come back in a couple of years and I'll buy another one. But if you're like Apple, and now half of your profits come from software revenue, recurring revenue, subscriptions, now you got a real business. And that's very, very much what Nvidia is working towards. They appreciate the importance of that. So if you look at their software ecosystem, especially the CUDA platform, that is a major strength. And they are really, really powerful tools for AI development. So they're creating that network effect. And that will make it more difficult for AMD and Intel and others to snap at their heels. Because if your whole system is based on Nvidia software, and that software will only run on Nvidia chips, well, you're not going to buy another chip. And okay, in 5 or 10 years, a regulator will come along and say, well, that is unfair. You are abusing your dominant market position. We're going to fine you 20 billion. Okay, Nvidia is going to pay that out of the, petty cash drawer. That's going to happen. So I'd like to hear a lot more about their software. How much revenue are we getting from software? How's that growing? How's that being adopted and what are the plans? Because to me, that is actually the real long-term growth for Nvidia. And remember, software can have a 90% gross margin. Hardware, typically not. I know they're doing something very similar with their hardware, which is insane, but the hardware margins are going to drop. They are going to drop down to eventually, not this year, maybe not next year, but eventually they're going to come down. But software is what's going to save them. Now, the other thing that's potentially going to save them is energy efficiency. And no, this isn't about, saving the planet or any of that. It's just that AI computing needs so much bloody energy. And energy is going to be so expensive and also just simply not available. There will be an energy shortage. So Nvidia, by reducing energy demand of their future chips and developing software to optimize power usage, that again is the thing that'll make people say, I'm going to buy an Nvidia chip or I'm going to buy the chip of another company. And then we have a whole nother segment, another industry that people don't really care to talk about yet, healthcare, life sciences, right? Nvidia's technology is already being used in medical imaging for diagnostics and genomic research and so on. And their GPUs are accelerating that analysis because there's an enormous amount of data around there. That again could be a huge industry. Imagine every medical device out there being powered by Nvidia and all that data being pushed into some sort of cloud system and being analyzed by Nvidia software, right? So there are a lot more opportunities here that people don't really look at. So the real question, of course, is can they execute on these opportunities? So far, they seem to be doing a particularly amazing job. They're so far ahead, there isn't really any apparent competition. And we want to see them keep pushing aggressively so that they stay so far ahead that there continues to be basically no competition. But what happens right after the 28th of August? September. Historically, this month has been about as kind to stocks as a cat to a mouse, especially in the semiconductor industry. For some reason, the market decides to take a vacation when everyone else is back from holiday. So September tends to be not the greatest market. And then, of course, we've got the Fed decision, interest rate cuts very likely happening in September. That should be a good thing. Although if they're giving us less cuts than we want them to, it's a little bit like expectations. Nvidia can come in and say, we've doubled revenue and profits. And the market goes, not enough. The same thing could, of course, happen with the Fed. And maybe the smart thing is just to take some risk off before this Nvidia earnings event. And I will probably do that. I've got a bunch of trades open that are very profitable right now. And I'm very tempted the day before Nvidia earnings to just take profits on a lot of those and just see what happens. And yes, it's possible I will miss a bit of a rally up. But the point of being a successful investor and trader is to reduce risk. And if we can reduce risk, we make a lot more money. And yes, sometimes we miss out on opportunities, but sometimes we also miss out on massive drops. So I would be a little cautious of this. And I don't think it's going to be a popular thing for me to say, but I say it anyway. And I would look at your portfolio and your trades, particularly if you're a trader, and just look at what would be the most affected by a disappointing Nvidia earnings. And then buy a put option, you could close some trades. There's a bunch of things you can do. And you could also put a little wager on Nvidia and say, hey, it's going to go up. Just don't buy call options because they're massively overpriced right now. They always are before earnings. So if you want to play with options, come and learn with us first how that actually works. And you can do that at felixprehn.org/bootcamp. Link is down below. So you want to be prepared. You want to understand the risks, but don't let them paralyze you. Just allow them to make better decisions. And if you have all the information that hopefully we've just laid out here, I think you're in a place to make better decisions, and that's always my goal. But decision making needs to prioritize risk over reward. That's how you make money in the long term. So it's not a get-rich-quick scheme, it's a get-rich-slow scheme, because the get-rich-quick scheme tends to leave you broke. So I'm very much excited for this Nvidia earnings setup here. And I think it's going to be a great opportunity. No matter which way it goes, we will make money out of it. We'll continue to make money out of it. So come and join us, see how we make money. felixprehn.org/bootcamp for about 2 hours. We're going to teach beginners how we do what we do and give you our whole structure and setup and everything else. And remember, whether you're bullish or bearish on Nvidia, the key is to be prepared. Understanding potential risks and rewards is crucial, especially in something as volatile as Nvidia. Until next time, this is Felix and my trusty sidekick Winston, wishing you happy trading and, of course, happier returns. And I'll keep you up to date with what Nvidia reports. All the best. Today, we're peeling back the curtain on some seriously eyebrow-raising stock moves by US elected officials. Now, my trusty sidekick Tallulah here may not have a degree in finance, but she's got a nose for sniffing at fishy investment